FTCH stock plunged to a 52-week low of $2.61 on a loss of 45.17% on above average volume of 167 million shares. And the folks at Morningstar, particularly through their analyst Jelena Sokolova, wrote this report concerning Farfetch. They're saying that they're reducing their fair value estimate for no-moat Farfetch to $11.4 from $12.2 as they lower their assumptions for the current year's growth and profitability due to weakness in the company's main markets, US and China, and sluggish New Guards Group revenue development. They still see the shares as undervalued at current levels, yes, but continue to prefer Zalando in the apparel online space on a bigger scale and in a more sound financial position. Yes, the stock is definitely undervalued relative to its fair value estimate. That's this fair value estimate that Morningstar are providing or have provided. So digital platform gross merchandise value or GMV was up 7% in the quarter, with 7% growth in active customers, even as it declined by a single digit in the US and China. The downgraded outlook for 10% growth in gross merchandise value now implies an ongoing mid-single digit decline in the US and China for the rest of this year, 2023. The main disappointment was weakness in New Guards Group's performance, with a 42% decline in constant currency brand platform gross merchandise value in the quarter, which the company attributed to delays in wholesale stocking and onboarding challenges with Reebok launch. Gross merchandise value for this division is expected to be flat for the rest of this year, as weakness in core brands is offset by Reebok. They have previously forecast volatility in this division given the early stage of brand development which they bring forward. They've also observed that weaker performance of less established, more wholesale-driven brands at other luxury companies, notably mid-single digits growth for Moncler's Stone Island, with a 25% decline in their Americas market in the quarter. Okay, so this is the business outlook. They believe Farfetch is well positioned to take advantage of a strong growth in online luxury goods buying, which they expect to increase to 35% in 2030. They expect Farfetch to increase its market share to 10% in 10 years' time from 5% in 2022. They expect the company to turn profitable in 2024. So a couple of other things down here. Okay. Economic moat. They don't believe Farfetch currently doesn't. They believe Farfetch doesn't benefit from an economic moat, which they think it displays traces of a network advantage, which is judged by whether existing and new users of the platform, buyers and sellers, benefit from the platform adding new users, and whether the user base can be profitably monetized. Nonetheless, they abstain from awarding the platform a moat because the network remains subscale and has not yet been monetized, and the industry is still in early innings, making it difficult to identify the winners with a high degree of certainty. Thus, they lack the confidence in persistent economic profit generation that is needed for a moat rating. Okay, so let's see here. They're saying they believe luxury brands are more difficult to onboard to online platforms than mid-price and low-cost brands, which protects the incumbent luxury online sellers, including Farfetch. Through their talks with luxury companies, they gauge that their concerns when picking online patterns are the right brand representation, which includes appropriate user interface with a luxurious feel, appropriate peer group. Non-luxury brand wants to be the priciest player in the retail channel, or the first one to come on board, creating a chicken and egg problem. No counterfeited goods display and control overpricing. Farfetch overcame these hurdles over more than 10 years, first addressing luxury retailers and building credibility with the brands over time through personal contacts. Okay, so these are the notes from the folks at Morningstar, and we have seen a pattern that has been with the stock. We can see, as I pointed out earlier on, it plunged to a 52-week low of $2.61, and I think all the way back to November of last year, In fact, as a matter of fact, all the way up, yeah, we're just going back all the way back to what have been going on since the last 52 weeks, technically, with the stock. You can see it has there's a pattern that is there. You can visibly see that pattern. There's a cycle that's been going on, but it's cycling all the way towards the cycle is not hasn't really resulted in a strong uptrend, where as a matter of fact we have seen the stock has been below its 200-day moving average. It only spiked above that 200-day moving average just about last month. That's about a month ago. That's because that moving average is also declining rapidly, and then the stock started to show some strength, and it's rose above it. It's not as if it's it has crossed above it, but also because it's been underperforming. It just a rebound. It just showed some strength in over the last month, over the last couple of months. From May to July, it showed some strength. That was why it rose above its 200-day moving average. But we have a pattern that has played out here. We can see this. It reached this peak of this double top, and this double top. This is a bearish signal. It reached this double top and then fell below its this moving average. I think this moving average is I think it's a 50-day moving average. Fell below that moving average, and then it's a confirmation that the bearish trend is in place, and then that was definitely confirmed. It's consolidated over a period of time here, and then spiked up again, and then we can see another double top. This time this double top was occurring in November. The previous double top occurred in September, and then they occurred again in November. That was 2 months away. And then we have a decline again, continue to decline, and then we now have they have been rallies. This rally began in late November, late December to December. It began to rally late December all the way till early February. So that's roughly let's just put it at as 1 month and a few days or thereabouts, not up to 2 months, and then declined again, and then consolidated for this consolidation here, or this decline here, was the longest in this since the last 1 year, and then showed some strength and began to rally sometime in early May. And then this was quite a strong period of rally, but it wasn't up to 2 months. It wasn't up to 2 months, and then we now saw what we're looking at right now. So the last time it had this significant amount of decline, I would say in one session alone, was all the way back in November, late November. Late November. That was when it plunged, or rather early December. That was when it plunged to this 52-week low. Was that a 52-week? I believe that may have been a 52-week low, and then spiked. It was a decline of 35%, and spiked by 10% the next trading session. So is that what we're going to see with this decline? There's definitely going to be some. There's going to be a buy the dip reaction come Monday the 21st of August. So we have projections, a rebound target. Let's see, rebound target of 4.17, but $4.17 is definitely more than 10% that it printed the last time it plunged a 52-week low, or rather the last time it plunged by margins relative to what we have yesterday, the 18th of August. So but in any case, there's a rebound target of 4.17. Even if it doesn't rebound today, if it doesn't rebound on Monday, it's the stock has this pattern in play, and it's it might show some strength. It's totally undervalued, and it may well rebound, or it may consolidate these sort of levels, move sideways, and begin to trade at this sort of levels. But it's presenting an attractive significant amount of it's presenting attractive prices, but also this huge volume we saw may also mean that those who participated may have gone away. They've done their much, they've gone away, and they may go on to do other things, so this is the projection on its 1 day chart. 4.25 is next upper projection, but it has projections all the way up towards 7.72 on its 1 day chart. So let's see the 45-minute chart. Let's see what we have there, any projections there. Okay, on its 45-minute chart, it's still trading within its Fibonacci grid, and it was showing some strength. As a matter of fact, it was showing some strength towards the end of that session. What looks like a slight upward incline. Okay, 2.66. Okay, that's just right about where it was. 2.69, 2.74. All of these are very much likely come the next trading session. 3.14. There are sort of prices that can happen. 3.14. As a matter of fact, after it plunged, it's plunged all the way in that session. Plunged all the way down to 2.74 and rebounded up all the way towards 3.11. So that session has ended, so something interesting might occur again come this come Monday the 21st, so 3.14 very much likely. It's sort of things that can happen based on its 30-minute chart. So based on its 45-minute chart, on its 30-minute chart, we also seen similar sort of prices. 3.31. It's these can occur. 3.12, 3.31. So see what you make of FTCH, and I'll definitely continue to update you. Thank you very much for watching this video.